What's up, traders? We did it. Rocket emojis, all that kind of stuff. We broke the level on the SPY today. Actually, officially, we'll break it in 7 minutes, but we're going to call it a break. I've been looking at this since my weekly report back on Sunday, as well as yesterday when we came down from the high down to the low. We got a minus 12% movement on the stock market, the SPY. I've been operating under the thesis that no, this is not the end of the world. No, this is not the collapse of the economy. This is the statistically predictable once every 2 years minus 10% correction. And the key was going to be when we got back to the 50% retracement of this down move. Well, yesterday on Monday, last day of January, January 31st, we came up and kissed that level. Didn't break it, didn't close above it. Today, very interesting price action. We traded this live on Discord in the room. Boom, boom, boom. As my friend says, show me where the bear touched you. It never really got in any danger. They just bought up every single little dip until finally we broke above that level. And so if we go back a little bit and we say, okay, what would have told us yesterday that this was going to happen? I was very neutral. I actually wanted to set up some bearish positions on this just as tests. And I did. The first trade of the day was a bearish trade and it just did not hold. I took profit on it and it was fine. But that's not what I'm going to talk about today. I want to talk about the S&P 500 or the SPY's relationship to the VIX, the VIX, always also known as the fear index. It is a great timing tool for trading the stock market index itself. It can oftentimes tell you before something's going to happen in the stock market what the VIX is. And I encourage you to do a little bit of homework on it to find out. But it is the implied volatility of the front month, 30 days options on the SPY. Typically, when the market goes down, it takes a dump. Implied volatility expands because now you're seeing volatility, you're seeing fear. People are buying protections on their positions with options. The demand for option goes up, and that's what's represented here. That's why they call it the fear index. But you can look at this as a bellwether of where the market might turn, where and when, because it has a sort of mean reverting property. In other words, it tends to come back to an average. And it works really well with my favorite method of analysis, which is using 50% retracements. So here's what we're going to do. We can do one of two things. We can take it from the all-time high that we made back on January the 4th, which would be a low on the VIX because this moves inversely. So a low on the VIX is a high on the stock market, roundabout. And so from here to here, we have our first level that the VIX could come back to and test. Now, if we want to be a little broader, we can also go all the way back to November, right here, where VIX was even more down to the bottom of the channel, which really represents where it was for most of 2021. And so as price comes down, I'm watching the VIX very, very closely. This was when we're going through this reaction in the S&P futures, or excuse me, the SPY. Let's do this. Let's actually bring these up side by side so I can show you guys what I'm talking about. Okay, so here is the dip on the SPY. There we go. There's a high on the VIX. That's where the SPY dropped out. Now let's go for 2 days. So here, the VIX up here, it came down to hold those levels. Now, when it did that, there was actually a good concern that this move on the SPY could continue downward because volatility came up, came back down to a resting point, held. This, if it had risen, we could have gotten more volatility and the market could have gone down more as well. So that was what initially you could have thought looking at this. As the days go along, We're still staying elevated. We haven't broke below that level. But 2 days later, we actually came back down to this level again and held it. I think we closed right on that level. Now the VIX is at an inflection point. It can either hold here where the top of the range has been on this recent pullback, or it can break. You see how we're also at the top of the range here. We're also holding at this level right here. This is key. Now, yesterday, Monday, the SPY got to its 50% level and held. It's at a resistance, but the VIX, it closed below its support. It closed both below both levels I did. There's really not much doubt that the VIX was telling you here that this move, this big volatile spike up, was over. That was your first clue. And sure enough, as we break, so too the VIX continues to go down. So what this suggested when we finally got a close here was that VIX volatility was going to normalize as the market continued up. We could see a lot of things happen. This thing could come back up to retest. We could get a little dip in here. But right now, my thesis has been that once every 2 years, statistically speaking, there's the close. We can now call it done. Statistically speaking, there is a minus 10% pullback once every 2 years. I was expecting it to happen this year because last year was record breaking up and to the right. And I think we got it. I know a lot of people want to talk about the FUD. A lot of people want to talk about how, the next one's coming. There's war with Ukraine. There's blah, 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 blah reasons. Whatever is FUD, whatever is fear sells. But if you just take a step back and look at the statistics, that was the opportunity. So I'm going to be watching this closely. The market does like to play games, but so far we've got our first real confirmation that we're going to go back up and retest the highs on the market. So wait and see. Trade wisely, guys. See you in the next video.